Meet Lance Breitstein, a record-breaker trader formerly at Trillium, now an advisor at the SMB Capital and the founder of the Impact competition.
There was one strategy I started to really study and hone in on. It was trading exhaustion gaps. And at a time when I was normally making $1,000, I made $10,000 in that one trade. So I have 100 milli plus in verified trading profits, almost 15 years trading. I was Trillium's top trader, and I set their all-time highest annual P&L. What if what we needed wasn't more knowledge or information? So there's this myth going on that more info is going to give you more certainty and actually affect your application and your efficacy. And it's all just an illusion. And you also want to block out anything that's making any prediction about the market. If I've learned anything in my time as a trader, nobody knows what's going to happen. Anybody that's speaking with certainties, you're just wasting your time.
All right, welcome back, everybody. It's my pleasure to introduce the next presenter of the Traderline Conference, Lance Breitstein. He'll be presenting today on why more information isn't the answer. Lance is a record-breaking trader formerly at Trillium. He is now an advisor at SMB Capital and the founder of the Impact competition. Lance, first of all, a pleasure as always to talk with you. I always learn something new, so thank you so much for taking the time and really looking forward to this. Welcome.
Thank you for having me, and good to be back for another year of this killer conference where there are always so many incredible guests, speakers where even I myself end up listening and studying. And I am taking a little bit of a controversial take, one that might be the antithesis of this Traderline conference. So we're just going to send it, and then when I don't get invited back next year, at least I know why. But hey, I've been kicked out of a couple parties before. Nevertheless, why more information is not the answer. So like you had mentioned, a little bit of my background and why my trading mentorship is $10,000 an hour, but I'm giving it all for free here. So I have 100 milli plus in verified trading profits, almost 15 years trading. I was Trillium's top trader, and I set their all-time highest annual P&L. Since then, I have managed and trained dozens of traders. I was running their Chicago office. I am now an advisor to SMB Capital, and I was Wired's day trading expert. To this day, I am still a mentor to many 7 and even 8-figure P&L per year traders, soon to be one of Jack Schwager's market wizards, which is a very long-winded way of saying that I've seen a lot of trading. I've traded at a high level, but most importantly, I have mentored so many traders, and I see what leads to traders failing, why traders don't really get liftoff, and also why traders stall out. I recognize that this audience tends to be more intermediate, more experienced. A lot of you probably have your strategies and your edge, and a lot of you want to achieve that next level. So why is it that so few kind of do? I know that you all are not part of the group that it just doesn't get any liftoff. You are a group that, by the nature of even listening to this conference, you are willing to do the work. You are willing to put in the hours, and that is not most people. Most people do not stand a chance at trading, but you all have already found some success or very much are willing to do what it takes to succeed. So the question I really want to pose and make the center of this whole presentation, what if what we needed wasn't more knowledge or information? And if you think about it, today we are living in the golden age of information. It is accessible, it is free. We now have ChatGPT that can tell us virtually anything. We've got all this knowledge on nutrition, weightlifting, productivity, psychology, business knowledge, trading knowledge. So why doesn't it actually translate? Why is it that the more we've learned about nutrition and healthy eating, we've actually become fatter? We've become less fit. Why is it that the more we've learned about psychology, we've become less happy? This knowledge has not translated into real results. And in trading, back when I started, there was not the just total broad breadth of so much knowledge on YouTube. There was not a Traderline conference. There were a couple books. The Market Wizard series still existed, but it was not one of those things where there was FinTwit with just hundreds and thousands of good traders sharing their resources openly. So why is it that nevertheless, traders still struggle to the same degree? You need to ask yourself, maybe more knowledge is not always the answer. And I think if we reflect on this at a broader level, we see this paradox in so many areas of life today. Like, look at all the self-help books. Over the last 10, 20 years, there have become hundreds, if not thousands of these books. If they all worked, you wouldn't need so many of these. We still wouldn't be short on time. We wouldn't be short on happiness. If these books actually did anything, it would lead to real results. And I think most people know that, guess what? We still are short on time. We're still short on happiness, and we're still caught in the same trap we always has been. And I would argue that more information is not the issue. In fact, it is the trap. And for those that are very astute slide readers, you might notice that some of these words are being doubled. This is a bug in my PowerPoint deck that I can't fix somehow. I tried everything, so I gave up. And I did not want to replicate this. So
you're just emphasizing the issue.
Here I am to talk about the issue, and tell you that the application is the problem. There are dozens of diets. There are dozens of workout plans, thousands of books on each of these subjects. Our knowledge has truly never been greater in all of history. Yet we are the unhealthiest we have ever been. Just to emphasize that point. So there's this myth going on that more info is going to give you more certainty and actually affect your application and your efficacy. And it's all just an illusion. We tell ourselves that if we just mastered one more indicator, if we just had one more expert opinion, or maybe just one more news source, we'd finally have the certainty we would need to level up our trading. This fantasy keeps us endlessly chasing the next information fix instead of facing the uncomfortable unknown of reflecting on what the most effective work we need to be doing is. And like actually doing it, right? How many people might get lost in productivity books, in fitness books, in diet books? When if you're trying to be productive, you need to be doing the hard work. If you're trying to lose weight, you need to be restricting your calories versus what you burn. If you're trying to build muscle, you need to be hitting your protein intake and lifting. And the nuances of your workout plan are far less important than are you consistently doing the actual heavy lifting and getting the protein. So there's this modern trader trap that's going on right now. We have so many amazing podcasts. We have podcasts like Words of Wisdom. He travels the world to meet with some of the best top traders in the space. And it is so produced, much like Diary of a CEO, and they're incredible to listen to. We have conferences all over the country and the world. We have Twitter. We have all of this fully out there. We have more trading courses, myself included, I'm part of this, than have ever existed before. So aren't we all here today to learn more information, to learn more strategies, to learn more indicators, to think how can we expand this? So is this going to actually be what we really need to be doing? Because it's all this fire hose, an infinite supply of never-ending information. And guess what? By this time next year, there's going to be infinite more, and it just increases and increases and increases. But what if all of that information that we think we need to be consuming is misdirecting us from what we actually need to be doing? So here's the truth. More info is more often a distraction. If you're trying to do your technical analysis and the pattern suggests ABC is going to be a breakout, what happens is you start consuming financial news. And you hear financial analysts that say, oh, we're expecting this to be weak, or it's downgraded, or it's overvalued. Or maybe you see on Twitter someone that you respect, a good trader, who might not trade your strategy, and they disagree with your opinion. How does that affect your trading? Does it make you better or worse? And the illusion of all this learning is you're actually not really making progress. Each new course, each new video, each new lecture, each new tweet, you think it's going to help you, but are you really actually getting closer to implementing what you're trying to be and achieve? So let me tell you a little story. At Trillium, where I spent pretty much my whole career, there was a trader who would do a lot of things right. He would put in a lot of hours, he would get in early, and he had some incredible edge. He was a good news trader. He knew the headlines that mattered, he was willing to put in the work, and he had really good reaction time. Some of the prints he would get on certain trades were incredible. But he had one big issue. He was never sizing up his trading. And if he wasn't willing to size up the trading, he was never, ever going to actually clear his costs and make real P&L. And so he would go on weekends because, again, he was putting in the work. He wanted to succeed. He was willing to do the work and put in the hours. But where his time went was not the effective place that was going to kind of leverage the constraint on his trading. He didn't need more edge. He didn't need more strategies. All he needed was to increase his size and make his trades really count. And so he'd go in on the weekend, and what would he do? He would read equity research reports. That looks like work. It feels like work. You're going to an office. How can one deny that this is work? He's clearly doing the work, and he wants to succeed. The issue, though, is while it looks like work, he's putting all of his effort into something that is not fixing the one constraint on his trading. It was not actually increasing his size. As a result, I saw him make the same mistakes again and again and again. And guess what? That trader is not a trader anymore. He never was able to cross the barrier despite having edge, despite having trades that many people would kill for. Just couldn't make it. So do you identify as any one of these? Are you the research analyst? Are you ineffectively studying the fundamentals as a way of avoiding the trading mistakes? Are you the strategy hopper? Bouncing between swing trading, scalping. Oh God, I'm sorry guys. I won't punish you with all this. Just know this isn't me. And momentum without mastering, it's killing me. The indicator collector, adding layers of complexity with each new YouTube video watched. Or the expert follower, trying to synthesize conflicting advice from multiple gurus. We feel this sense of knowledge FOMO, but it's still FOMO. The same way we feel FOMO if we're not in a trade. The anxiety is real. What if that next video, that next podcast, that next tweet, that next course, what if that actually has the secret that's going to fix my trading? Just like FOMO leads to impulsive entries, FOMO learning leads to compulsive consumption without actually integrating. Both are driven by insecurity, not being a real intentional strategy. So let me break into another case study. Many know Pradeep Bond. He's done a lot of amazing teachings on episodic pivots, and he's been very generous and public about his strategies and how he executes these trades. That information has been publicly out there for decades now. Decades. There's been, since then, hundreds of thousands of traders that have not succeeded, despite a proven strategy being out there in the public. Meanwhile, many people might have heard of Christian Qullamaggie. He is a Swedish trader that took Pradeep's strategies and ended up making, to my knowledge, if I'm not mistaken, over $100 million trading those strategies. I think, again, I don't know Pradeep's full details and financials, but I think he even exceeded Pradeep and has become one of the most famous just traders for what Pradeep kind of pioneered. So what was so different about Qullamaggie versus the 100,000 other traders that failed? Then the real question is what Qullamaggie did. Qullamaggie is why is it that what he did is exactly what my trainer did, exactly what my good friend Greg Shabika, LX21, did, and every elite trader I know, they all have this in common. So Qullamaggie kind of found out about Pradeep's strategies, and rather than endlessly consuming the infinite training books out there, he started doing the hard work. He started going back in time, and he started looking at hundreds and hundreds and hundreds, if not thousands and thousands and thousands of charts, annotating them, and figuring out and refining that strategy for him. He was doing the hard work, the work that really hurts your head, the work that when you wake up in the morning, you try and avoid it, the work that you avoid by distractions via trading content. And instead, What he did was he went through all these data points, refined his strategy, and proceeded to just absolutely crush it. My trainer who taught me, he did consume a bunch of trading knowledge, but what really happened was he started going through thousands and thousands of charts, annotating them, and figuring out the patterns over time. Greg Shabika, LX21, he, rather than go to college, he was building swing sets. Over the winter, when he wasn't building swing sets, he started to read about a couple trading books. He started to study charts, and this was before even electronic charting. He manually backtested every single strategy that he was studying. What he wasn't doing was kind of on Twitter. Twitter didn't even exist. He wasn't on YouTube. YouTube didn't exist. He read a couple books, he started to think about this stuff deeply, and he started to do the work. Every elite trader I know has that in common. They were doing the hard work that mattered. They were not getting lost in the infinite amount of content out there. So let's use a simple analogy. Let's say I wanted to become a pro quarterback. Let's say that Tom Brady, Patrick Mahomes, Peyton Manning, they all had courses out. How would you become a pro quarterback as fast as possible? I think a couple things should be obvious. First of all, no matter what path we choose, we know it's going to take work. You know that nobody is going to make it into the NFL without doing tens of thousands of reps, hundreds of thousands of reps. You know they're not going to make it into the NFL without thousands of hours of game time. If you wanted to become a good quarterback as fast as possible, you would not be taking advice from the millions of armchair quarterbacks online or on social. You would not care a thing about what they say, because guess what? They're not professional quarterbacks. You would want to shut out all of that noise on the internet as possible. You don't need to follow every single QB course or every single video out there. What you would want to do was find a couple mentors you respect or that coach you and can directly help your trading. And no matter what, you would still need to put in thousands of hours of work throwing the football, practicing, reviewing game tape, going to the gym, and refining your actual style of play. There is no substitute for that. And no matter what, you're not the same as Patrick Mahomes or Tom Brady or Peyton Manning. You don't have the same flexibility or the same height or the same weight. You have your own strengths and you have your own weaknesses. Nothing can ever replace or change that. You're going to need to do the work and develop your own style based on what makes you great. And so the things I recommend you start to do is you want to choose a few trusted sources. And you want quality over quantity. Identify 2 to 3 sources that align with your style and your time frame. Ideally, verified traders with proven track records. You then want consistency. Much like with diets, many work, but most people are not following them long enough to actually translate it into results. You then want to cut out the noise ruthlessly. What do you want to filter? You do not want to listen to financial news commentary. You do not need 99% of the stuff on Twitter and social media. I promise you, not only is it a distraction, but it's even worse than that for reasons we'll get into later. You also want to cut out a lot of the bullshit going on in the Discord chat rooms. There are productive chat rooms and there are productive comments, but there's also a lot of people just fluffing themselves up, cherry picking their trades, and ultimately distracting you from, again, doing the work and the focus you need to be doing. And then also, look, there's probably 1,000 verified really good traders somewhere out there on the internet. You can't learn from all of them at once. You can't do it, and you don't need to do it, and it's going to be counterproductive. All you need is a couple that you trust to really take you on the path. And you also want to block out anything that's making any prediction about the market. If I've learned anything in my time as a trader, nobody knows what's going to happen. Anybody that's speaking with certainties or anybody that's speaking with confidence that they do know, you're just wasting your time. So then once you have that figured out, you want to do the reps. Same way with the quarterback analogy, there's no substitute for that. So what does doing the reps actually mean for traders? It's doing a lot of the work that Qullamaggie and my trainer and I and others have done to find success. A lot of it is chart time. You are going through thousands and thousands of charts. You are studying them with intention. You are annotating them. You are looking at the nuances and figuring out what really matters. You're also building a playbook, and this is a concept I'll dive a little bit more into. But that's just the foundation of finding edge and pattern recognition. There's no way you can get those charts into your brain or find the ones that make sense to you without just looking through a lot of them. The next step, of course, is going to be real-time trading. You want to execute your strategy while building real-time consciousness and build the ability to identify, execute, and capture plays in your playbook. With the quarterback analogy, that's the equivalent of just actually playing a game. You need game time experience because that's ultimately what the job's going to come down to. Yes, you need to do a bunch of drills, but the drills are solely to help you execute in real time. Then as you're doing that, you're going to be collecting data, you're going to be backtesting, journaling, doing your write-ups, watching tape, and refining. The same way as a pro quarterback at the end of each game or any game you play, you're reviewing what you did well, what you could have done better, and you're building plans to work on that. That A, B, and C, that really is like 90% of the work people need to be doing. So to break that down further, the chart collection. Before you build that playbook, you want to collect and categorize as many charts of in-play stocks as possible. If I was starting totally from scratch, this is how I would start. If I knew nothing about trading, if I knew nothing about edge, I would simply be trying to find the craziest charts possible, the most volatile, the biggest ranges, the biggest volume, the stocks making the really big moves. And I would screenshot every instance. I would put them into Evernote or I would put them into Notion, and I would start to organize these charts by different variables. I think most people have a basic idea of technical analysis. So maybe we can group them by breakouts. Maybe we can group them by breakdowns. Maybe we can do trend lines. Maybe we can do moving averages. Maybe we can do some type of mean reversion play. Maybe we can categorize stocks that have all had breaking news on them. Maybe we can categorize stocks that have had massive, massive volume capitulations. Maybe we can categorize stocks that have made 3, 4, 5 legs in a single direction. All of that is going to be the foundation of building edge and the pattern recognition we need to succeed. Then you want to annotate all those variables that made the setup better or worse. For example, is a breakout better when we have more consolidation before the break or less? Is a breakout better when it's the 4th leg or the 5th leg versus the 1st? Is a breakout better when there's breaking news leading the stock to break the level, when there's a catalyst involved like that? Is a breakout better when the market is working with it and breaking out as well? You can only do those studies by collecting all of these charts and going through them. And once you do that and you make those annotations and you start to develop this sense from seeing hundreds of these, you can begin to rank them based on quality. And that ranking, that can change over time. You're going to learn more. You're going to learn what nuances matter. You're going to refine. But just to begin, that's a really solid plan. The next step is you're going to be building your playbook. And I assume a lot of you already have this, whether formally or not. And what this playbook is you take all of those charts and you start to codify how you would capture that strategy, what your exact setup criteria is with visual examples. You want to make entry and exit rules with no ambiguity. What is your stop? What is your out? How are you going to size your position? When should you be larger in the trade? And when should you be less? What are the full risk management parameters behind this trading? What are going to be your pre-trade and post-trade checklists to make sure you're executing your strategies? Those charts and that playbook, that gives you the foundation to trade. With that, you can really start to move into real-time trading. When you're doing the real-time trading, that's where you can start to use stuff like a daily report card to help you focus on one single goal to be conscious about. What is that one goal that's going to make the largest impact on your trading? For that unnamed Trillium trader, the one single goal he should have been focusing on when he went to work was, how can I increase my size? Not how can I have more knowledge, not how can I study a different indicator. No matter how much knowledge, indicator, different strategies, or edge, none of it was going to make a difference unless he fixed the one constraint for him, which was the ability to bet larger and increase his size. And he put in so much work, but he never did that one thing. He never did the one thing that mattered to make that trading business a success. And you want to find that goal and then just consciously, relentlessly focus on that goal in real time. And so many traders, I would see them day to day, and they would do what I would call mindless trading. Mindless trading is where you're just going through the motions. You're going to the driving range, but you're not thinking about your swing. You're not making those micro corrections. You're not incorporating feedback after the trade. And I love thinking about the golf analogy as I try and improve my own very shitty golf game. You would think that the more time you spend at a driving range, the better you're going to become. That's actually not true. If you go to a driving range and if you do thousands of the same shitty swing and you reinforce shitty habits and you're not mindful and intentional, that practice isn't making you better. It's cementing the same mistakes that are actually holding you back from succeeding. And so what I really push people to do is when you're in real time, how can we be as conscious as possible? When we're executing those trades, how can we have that one single goal we're working on streaming through our mind, that stream of consciousness? That's what actually makes it deliberate. And again, it's not comfortable. It takes work. It takes effort. It takes intention. It is far more mentally draining to go to the driving range and be thinking about every single swing and making those micro corrections. All of a sudden, the driving range isn't so much fun anymore. It feels like work. And that's because it is. And work is what leads to success. Not fun. Sometimes they overlap and work can be fun. But you want to know what also feels fun is seeing yourself make real progress, right? It's almost that paradox. When you're doing deliberate practice, it's not easy. It's not fun. It feels like work. It's not pleasant. In the short term, it sucks and it hurts. But in the long run, that progress is fulfilling and it feels great. And you're proud of what you've achieved. And so many people fall for that trap of consuming content because in the short run, it feels good. It feels like you're accomplishing something. It feels like you're productive. But in the long run, it leads to pain. And you get to choose your pain. I don't remember where I saw this, but no matter what, there's pain. You get to choose your pain, whether it's short-term pain that leads to long-term gain or short-term pleasantness that leads to long-term pain. And I know which one I want. So then once you're doing this real-time trading, you then move on to the data collection and the back testing. And obviously all of these to some degree eventually run in parallel, right? So you want to be tracking your win rate, your average win and your loss, and your expectancy by setup type. There's so many traders I know that are working really hard, but they don't collect this data. And so they don't really know, are they being as effective as possible? Are they doing the work that's going to really get them to that next level? Without data, you're kind of flying blind. One story that I always like to tell about data collection is when I was running an office, I had some trainees, and one of the trainees was trading every single IPO that came out. And after another shitty IPO that he lost money in, I said to him, like, hey, why the hell are you trading all these shitty IPOs? And he said, well, I've got my data. I make money in IPOs. I make $20,000 in these IPOs. And guess what? I also knew his data. And so at face value, factually, that was correct. He does make $20,000 trading these IPOs. But he hadn't done the hard analysis. He hadn't done the hard work and really studied that. Because if he looked one level deeper, what he would recognize was he makes $50,000 in the 3 hot IPOs and then proceeds to lose $30,000 in the 7 not hot IPOs. And that one piece of knowledge, that has all the leverage. Because guess what? If you start doubling your size and increasing your size in all IPOs and you get 7 shitty IPOs in a row, all of a sudden you're a losing trader and you think you don't have edge and you're on the exact wrong path. But with the right data and the right change in the right spot, if you start cutting out the shitty IPOs, you only trade the hot IPOs, and then you double your size, guess what? You just went from making 20K in IPOs, you're now making $100,000 and you've got a career. And so that data is so important. And so I study the data of my trades and my strategies, but I also study my own performance data, the ratio of positive days to negative ones, the average winning day versus losing, the profits by the setups, and the variables that impact your trading performance. You want to know a piece of data? Couple pieces of data that enormously impacted my trading, but that weren't found in any podcast I've ever listened to. The two most common places that I lost good chunks of money. It wasn't FOMO, it wasn't on tilt, it wasn't because of some indicator. It was going through my own data and finding out that if I was ever hungover, sick, or tired, I was taking my biggest losses like almost every time because of one of those three reasons. Another sneaky place where I was taking big losses was the day before vacation. If there was a long weekend or if I was going on a trip, I eventually studied the data, which is not fun or enjoyable, and I learned, oh my God, so often the day before vacation, I'm letting my guard down. I'm halfway mentally checked out, and as a result, my data is awful. And those are very easy changes to fix. All of a sudden, it's something as simple as, hey, guess what? The day before vacation, I'm either just way sizing down, I'm having a tighter daily loss limit, or I might just not trade at all. And all of a sudden, you're saving huge amounts of money for very, very low effort. And that change works into perpetuity. That's a lot of ROI for a very simple change. But I've never seen anyone say that in any podcast. That was just unique to me and my data. And so that requires you to spot trends and figure out, when do you trade at your best? When do you trade at your worst? And what plays do you need to size up or down? But the truth is, you're not going to find that answer from anyone else. It is unique to you. And so much of trading, at a high level, the principles are common, but in the actual application, the answers are all within yourself. The other part is you want to be journaling and doing write-ups to capture each day's lessons. Record what matters, learn from yourself, and figure out, why did you miss your setup? Why did you hesitate? One thing I find amazing about missing trades or over trading or FOMO or tilt, there's a lot of reasons why people overtrade. In fact, I'd argue there's infinite reasons why people overtrade. There's infinite reasons why people hesitate. There's infinite reasons why people miss setups. I can give you maybe 10 of the most common, but ultimately, the only person that can figure out the answer for you is you. And so that requires you doing the journaling and recording your thoughts, you recording your emotions while they are as fresh as possible. To do some of that journaling, I use a format that I call the daily report card. All of that is totally online and free if you just Google it. And the same for my trade write-up template. And I recognize not everyone works the same way. There's some people that are less systematic. They don't do the write-ups. They don't do the daily report cards. And you need to find out what parts of this method work for you. How can you make it sustainable so that this is something you can do for the long run? So you might be asking yourself, what does this most commonly end up looking like at the various stages of development? First, I want to tell you a story and a lesson with it. And really that lesson comes down to always studying the outliers. When I hire people, which I guess I don't really hire people anymore, but when I hire traders, I would tell them that the learning curve was at least 2 years. If you were not willing to commit to a 2-year learning curve, you might as well not even get started. And I think for many of you, you would recognize that is true. And that's for a full-time trader. If you're doing this part-time, if you're doing this with a job, if you're doing this without proper mentorship, if you're doing this without proper resources, the learning curve's even longer. And like I said, if you're trying to become a pro quarterback, you can't just magically find some shortcut and become a pro quarterback in 6 months. Nevertheless, sometimes there are outliers. There are outliers that find very high levels of performance in very short amount of time. And we need to study those. So let me tell you a little story about someone I mentored last year. He was about a year and a half in, and he made over $1 million in 2024. How's that possible? Many of us would want to say luck. And truth be told, I actually, that was my first assumption as well. When he wanted to work with me, I was like, oh boy, we've got someone that ultimately is likely still a beginner and probably did this with a couple YOLOs, as the kids would say. And we did this call, and I was dead wrong. There's always going to be a portion of luck, but what he did was actually very much legit. The reason why he succeeded and the reason why he did so much better than traders with 3, 4, 5, 6 years more experience was because he found what the best plays of 2024 were. He found what the themes were, and he followed a very basic system that I had kind of just taught openly online, and he followed that. And so there were trades like last year, the Tesla 360 breakout. And there were trades like that, and he trailed it using prior bar lows, not even for a lot of size. Couple thousand shares. But there were some times where that would work really, really well. He was in the right themes with the right system in a momentum market where swing trading momentum was insanely effective. So he was catching stocks like Tesla, making its 80-point plus move and trailing it. He was catching stocks like MSTR, and he was catching breakouts like the quantum names. And all of these were replicable, easy to learn patterns. There was nothing crazy complex. Essentially, all he did was identify that this is the market and the type of style that has been working for 2024. He built a system to spot these setups, and he executed, and not even for crazy size. You know, you're talking, if you do 5,000 shares of Tesla, which was towards the back end of the year after he had been kind of growing, 5,000 shares of Tesla, the way that broke out, that might even be 25 to 50 grand of risk. When that goes, 80 points or something, you make $400,000, right? And this is a trader that the prior year was kind of negged to, nearly nothing. Same with the quantum names. You were able to swing some of those trades, and that was what was hyper in play. So yeah, there's always some degree of luck, but what he did was he found the areas that offered the absolute most leverage to him. And guess what? He didn't need news sources. He didn't need equity research. He didn't need a zillion indicators. All he did was figure out the most effective way to capture the simple setup. And he didn't even use a lot of size. And it was scalable. There's no reason why the million he made couldn't have been 10 million. It really could have. And so anytime I hear a story like that, I always try to reverse engineer, right? For many people, it is just luck. For some people, it's not. And you need to always find the signal. What was this person doing that's so powerful that allowed him to do that? And so here's what I think are kind of the high leverage points at each stage in a career. In the beginning stages, you absolutely do need to explore in this stage. That's when you should be open to different ideas. That is when you want to find the right mentors, the right sources of information. That is when you want to listen to this conference and absorb like a sponge. Content absolutely has its place. Also during this stage, you want to be building databases of charts. You want to be collecting the data, testing hypotheses and different strategies, consuming content for practical application of these strategies, figuring out your indicators and your ideas, and also finding a trading pod. In other words, people that you can learn from and they can accelerate your learning and help boost your strengths and minimize your weaknesses. This exploratory stage is when you're doing exactly what Qullamaggie did, exactly what Greg Shabika did, what my trainer did, and I did. And yes, to even find what to look for in charts, it requires someone that's laid out the path. You do need to follow. It does help here to study what the greats have done, to study what all the really good traders as a part of this conference do to find their edge. But here's what it doesn't look like. You don't really need to be reading books on psychology at this point. Psychology, like you don't even have edge yet. You shouldn't even necessarily be risking capital. There shouldn't be FOMO, tilt, and all these other things. You don't want to be just bullshitting on Twitter, meandering aimlessly. You really, really, really want to consume content, but make sure that if you consume the content and it has a use, you're testing it, you're collecting the data, and you're making it applicable. At the beginner stages, that's the real work you need to do. At the intermediate stages, this is perhaps when content can be most harmful, if not moderated. At these stages, you want to be drilling deeper on your edge and refining your strengths while minimizing your weaknesses. What does this look like? Refining the variables and setups. What makes your best setups great? What makes your worst setups not great? You want to be building a risk management framework. What is your daily loss limit? When do you need to be sizing down? When do you need to be sizing up? What is the right amount of risk to risk on certain days that are more opportunistic than others? You want to be figuring out how to spot more of your easy money trades. Something many people way underestimate, especially if you're starting to be profitable. You want to find, how do I capture every single easy trade in my playbook? It is not acceptable to miss your easy money trades. Then, often what provides the most leverage once you have that edge from the beginner stages, you need to be prudently increasing your size. You need to be removing the low ROI strategies and maximizing the best ones. You need to be watching tape to enhance your edge. What that doesn't look like is once you found edge, there's no point anymore floating from strategy to strategy if what you're doing is working and in play. You don't want to be changing timeframes. You don't need to be adding indicators right now. And most of all, you don't need to be comparing progress to others. You need to be focusing on your work and your edge and further watering the plant that's already starting to sprout because of the hard work you put in. And one thing that I'd like to emphasize is in the early stages, you want to explore. But once you find something that is promised or starts to work, that's when you want to drill deeply, not broadly. And what I would say and remind you all is that the jack of all trades makes $0. The master of one trade makes millions. And so when I was first learning from my mentor, he was a master of a couple strategies, actually even many strategies, because he had been trading for over a decade. And I was trying to learn from a fire hose. I was trying to learn all of his strategies at once. And so let's say in trading, to make money at a strategy, you might need to be a 6 out of 10. I was a 3 out of 10 at a bunch of strategies. I was making no money. But there was one strategy I started to really study and hone in on. It was trading exhaustion gaps. And sure enough, this play kind of panned out, and I was able to short Tesla. And at a time when I was normally making $1,000, I made $10,000 in that one trade. Now here's the thing. My boss made hundreds of thousands of dollars in that trade. And that's when I realized, forget every other strategy that I'm currently a 3 out of 10 at. If I just get good and become exceptional at this one strategy, I can have a career at this job. And so guess what? That same exhaustion gap strategy, that strategy in 2024 probably made me over $5 million. And I did other things in 2024, but had I done nothing else, that is one hell of a career. And there's people like Qullamaggie who's made $100+ million doing 1 or 2 strategies, but doing them really, really, really well. So that depth is more important than breadth at that intermediate stage. And those most successful traders, they specialize ruthlessly. It's a small set of setups that they recognize instantly. It's a time frame aligned with their personality, and it's a risk approach that fits them. They go narrow and deep rather wide and shallow. And what you might also realize is nothing I just discussed is based on anyone else. It doesn't matter how much another trader risked. It doesn't matter how another trader traded it. All it is about is you finding out what works for you and drilling in deep to make it work. In the advanced stages, often the lowest hanging fruit here is continuing to maximize your size. You want to spot more setups and ensure you are mentally and psychologically at your best each day. So what does that look like? That means further pushing your size, journaling, potentially now working with a trading psychologist because there's probably ROI there, optimizing your sleep, automating strategies and systems to capture all plays in your playbook. Then, if your plays aren't in play, that's when you can potentially be adding on new strategies while continuing to refine your risk management. What that doesn't look like is falling into the knowledge trap, consuming content rather than executing your best practices, or endlessly game planning low probability events. What you really want to do is just be pushing that size. You don't need to obsess what others are doing. You're playing your own game and you're successful at that game. And it's time to maximize it. Then at the elite stages, the lowest hanging fruit here is about maximizing the edge you've already built. That's where you're elite at a strategy. You're making millions or tens of millions out of strategy. And the question becomes, how can you expand that strategy to maximize its expected value? How can you expand to different timeframes, potentially with more liquidity? How can you automate this process so you can do it at all hours of the day, across all markets, across the globe, across different products itself, and build processes to do that, as well as optimize your psychology? Most important in this stage is you don't need to be comparing yourself to others. You don't need to be drifting into areas outside your expertise. I see so many elite traders that are exceptional at what they do, and they see other people finding success elsewhere, and they drift into their strategies and they lose their core competencies, whether through boredom or through FOMO and tilt or whatever else. The psychology game is what ends up beating elite traders more than anything else. So everything I've said here, how can you then supercharge these practices? First of all, mentorship. Having direct feedback from someone that is a pro is infinitely more valuable than all the noise online. Any person online does not know anything about your specific situation. All the time on Twitter, I get people asking me, should they quit trading? Should they stay with trading? Should they risk 1% of their account? Should they risk 5% of their account? Should they expand strategies or should they refine their best one? Guess what? There is absolutely no way I or anyone else can answer that question. I don't know anything about these traders. And guess what? Anybody that's ever speaking to you in a mass-produced online format, no one can speak directly to your situation. But if you get mentorship you trust from someone in your trading pod or from someone that has walked the path that you've walked, similar strategies and everything else, they can give you that feedback. They can help accelerate your learning. And all the pros that I've seen do exceptionally well, every single one of them has had mentorship in some format. It can't be understated how much faster you can move, right? If you look at any good athlete, if you look at any good quarterback, golfer, if you look at a power lifter, a bodybuilder, they all have coaches. Even if they're technically better than their coaches at their craft, they still have coaches to help guide them and refine them. That feedback, that learning, and that accountability is unmatched. The other thing that I've found is every single person that has an outlier output, and it's not just in trading. If you look at someone in the podcasting space, like Mr. Beast, if you look at Lex Friedman, if you look at Huberman, these are people that their output punches way above their weight class. And the reason why is if you look at their routines, they're making the space for the real deep work. 1 hour of deep work is easily at least worth 10 hours of consumption. So a lot of these people, when it comes down to getting the work done, they're turning off their phone. Even if they have massive social media presences, they are getting off social media. They're using apps like the Freedom app to block distractions. And what I've personally found to be my number one hack for actually having high output and doing the hard work is ever since I was a trainee, I would block out 2 to 3 hours of deep work on Sundays. The market is closed. I'm not getting emails. I'm not getting text messages. Sunday mornings are by far my most effective, refreshed time when I can just hammer out hours of work that actually move the needle. There's nothing pulling me in a million directions. And that work is so, so critical for all the times when during the week you are distracted. The other thing, touching on this social media stuff and how poisonous it is social media really distorts your psychology. And I see this all the time. And I've done pieces on this, but I can't stress to you. The data points to me being one of the best traders in the world. Objectively, I am a good trader. I think that's fair enough. When I spend time on Twitter and online, I feel like I suck. I feel like I am poor. I feel like I'm missing so many opportunities and so much money. And if I'm feeling that, everyone else out there stuck in that social environment is just being ruined. I have every process in place to focus on my strengths, and I still feel that toxicity suck me down. And I recognize this because I have an inside view. I know so many of these people posting this stuff. And what you see, first of all, is survivorship bias. You only see the winners, never the thousands who failed. Anytime there's a really, really good trade, do you want to know, first of all, if someone's still posting on Twitter, think about this. The people with the most followers are the people that by definition have been around the longest. They've only been around the longest because they've succeeded. They've found success. You don't see the thousands who never even reached that point. The other thing is, even for these successes, every single person cherry picks the trades and comments they share. Trust me, everyone. You should always be asking yourself online, if I'm seeing a P&L, if I'm seeing a trade, if I'm seeing a chart of executions, why am I seeing this? Even if they're a 100% legit trader, people emotionally do what's most comfortable for the internet likes. People are not readily sharing their losses. They're not sharing their mess ups. They're not sharing the stuff that comes embarrassing. No one ever highlights their tweet, hey, look how wrong I was on this market call. What they say is in a whole Discord of, just spamming bullshit the whole day. Look at the 3 things that were right in my private Discord, and now I'm going to share it on Twitter. Look how good my calls were. And here's a fascinating thing. There is an incredible trader I know. He is one of the best in the space. He crushes it. There were months where he didn't crush it. You will not see those P&Ls online. The P&Ls weren't shared. Where were they? But when he does do well, you see the massive P&L. And that isn't necessarily malicious. It's not necessarily malevolent. It's simply because it's just psychologically more comfortable to share the good times, and you're incentivized to not share the bad, psychologically and emotionally. And so even for the very best, that dynamic exists. How do you think, all the other people, even less than them, are doing? You think they're not taking losses? The other thing I would say is ultimately none of that is actionable or emotionally productive. How much of the hours and hours you spend consuming social, consuming YouTube, consuming books, consuming blogs, how much of that is actually actionable for your trading? Will it make a single difference? You want to really reflect on putting time in to improve, not for the dopamine fix. Busy does not mean progress. Here are some of the signs you might be stuck in that consumption trap. Are you always buying new courses and books? Are you not finishing or actually doing the data and the testing and the hypotheses of the work you previously started? Do you spend way more time on YouTube and Twitter than actually doing the hard work, the backtesting, the chart studies, the self-reflection, the journaling? What you want to be doing is you want to pick your lane and you want to build in silence. Choose your strategy, one that makes sense, one that you have data, and commit to it. Block out the conflicting voices and the approaches. Log the screen time, studying your patterns. Develop in isolation without external validation. And I still count that as with a pod. If you can still work with a team together, just block out the rest of the noise. The real measure of progress and if what you're doing is working is your equity curve growing over the long run. That's how you judge success. It doesn't matter if anyone else is finding more success or less success. You're here to play your own game. And a lot of this comes down to iteration. You want reps over reads. You want to figure out the principles that are working for you, the time that's leading to a high ROI. You want to be implementing these changes immediately, not next week or next month. You want to be reviewing your results and then refining and iterating again and again. So many of the best traders I know, they have the fastest feedback loop on when they study their trades, they figure out the problem, they propose solutions, and then they iterate a plan to implement that. It's this boring work that actually makes great traders great. Think about the Kobes, think about the Steph Currys, the LeBrons. Those are not the people just bullshitting on YouTube. Those are the people that are at the arena hours before, warming up, doing their same practice drill. They're the ones at the gym. They're the ones recovering. They're great because they're putting their time in the real stuff, not into the stuff that just gets you caught up doing bullshit. The greatest people in the arena are the ones performing and doing their best, and they're not focused on what the people outside the arena are saying or doing. So my challenge to you all, spend 1 week and track where your work time gets allocated. Take the time to reflect on what one improvement to your trading would have the best ROI. I can't tell anyone what that improvement would be without looking at their data. And guess what? You are the one that needs to do that deep reflection. That's the hard work that people avoid. You need to break it down and build a plan for how to execute on that improvement and systemize that improvement into your daily routine. If you haven't read Atomic Habits, that's one of those books that actually matters because it's actionable and it tells you how to systemize this stuff into your routine and how to construct an environment that blocks the noise, blocks the distractions, and maximizes the odds of you hitting that routine and seeing the progress you want. So that kind of begs the question, should you stop consuming other info? Not necessarily. Like, look, I get it. We're all human. We all enjoy the podcast. We all enjoy the Twitter feed. We all enjoy the scrolling. We all enjoy the trading books and the self-help books. I absolutely do consume this stuff. But here's the most important 2 points. I consume a lot of this content, but I don't consider it to be true productive work. I recognize it as entertainment that might have new ideas and inspiration or be motivational or emotionally empowering, but it's not the true productive work that's going to make the big difference. And so it's okay to engage with this content, but do not let that content distract you from doing the true deep work that needs to be done. It sounds so cliche, but every single day, whether it's for my trading, my businesses, my health, I have my list of the most important things I need to do that day. Maybe it's studying a chart. Maybe it's backtesting something. Maybe it's building a filter. Maybe it's a certain piece of content. Maybe it's going to the gym. I have my list of the 5 or 6 things I need to do that day. Without fail, I hit that list every single day. If I want to bullshit and watch content and consume after the fact, that's fine. But no matter what, that list gets hit. So let me tell you another story. As part of my daily report card, I have my little 1% improvement idea. So every single day, I would not leave the office unless I wrote down a 1% improvement idea that would make me a better trader the next day. And so no matter what, for years and years and years, I was making sure I was hitting the most important things that were going to make me better. And I was not leaving the office until I did that. Once I left the office, hey, fine, I can do whatever with my time. But that did not happen until the big ROI stuff was coming first. When that compounds over years and years and years, that's how you end up an 8-figure trader and not just mediocre, like many fall into the trap of doing. So with that being said, if you found this presentation to be dumb and useless, ignore everything I mentioned here. And instead, follow me on YouTube, Twitter, Instagram, and TikTok. It's endless. The options are literally endless of where you can consume this content. And ultimately, thank you for listening. I know this was a controversial topic. I know this was not part of the magical secrets many might have wanted. It's because I don't have any more of those secrets. I've told so much of my strategies, my views already. But I think it really comes down for many of you seeking that next level to do the hard work for you.
Lance, first of all, thanks so much. And, I think No, this was a great presentation. This is I think perfect, because we always kind of say here on this channel, especially with the conferences, where there's so many different perspectives. There's day traders, there's swing traders, there's position traders, there's people who are more on their investing side. Take what you find useful, test it out for yourself, make it your own, and ignore everything else. So I think with all these different perspectives that are shared, what you said here is really important and relevant, that you want to make sure that you're focusing on improving your process, your system, and you can find little bits and pieces to take from others. But at the end of the day, you have to put in the work and put in the productive work and make it your own. So I think, first of all, thank you so much for this. To start with, I want to kind of use maybe an example of a trader who wants to master your right side of the V setup. What would be your process if you're starting completely new in terms of finding historical examples, studying that setup, trying to build conviction and confidence in executing, that specific entry tactic?
Whew. That was a good water break, actually.
Yep.
So yeah, and I think this is important, right? So let's get granular with this. What you're referring to is my concept called the right side of the V, which is essentially like, okay, if a stock is panicking, rather than buying on the front side as it's going down, 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 you want to wait for the turn, and you can buy at the same price, but your expected value once the turn is in is better than on the front side when the turn isn't in. And so the most common question when people hear about that concept is they say, how do I not suffer death by 1,000 paper cuts where I just get chopped up every time the stock goes like that? And so what I say is you need to find the most extreme examples. And so if somebody wants to study the right side of the V, what you want to do is really almost on any time frame, but ideally on the time frame you're most focused on. Step one, let's start collecting charts. Can we find some type of stock filtering software? So I use stockfetcher.com, which is absurdly cheap. I don't think the price has gone up in the 15 years I've been using it. I think people could do this using ChatGPT encoding or whatever filter they do. But the first step is how can I build a filter that can help me spot these setups retroactively so I can backtest them? And then you want to find the most extreme of these setups and just simply collect the charts. Collect the charts without biases. And then start to provide context to the chart. Was there any breaking news that happened? Was there anything going on in the market? Was there anything going on with similar comparables? And you want to build this database. And for something like a big capitulation right side of the V chart, you can find hundreds of those. In fact, you can find thousands of them on all sorts of time frames and over 10, 20 plus years. And one thing I love doing this exercise too is you will find that this concept and this type of capitulation trade has existed since as far back as the data goes. I've seen this chart pattern pan out in 2008. I've seen it pan out in 1987. The concept, a lot of these principles are universal. And what you can do is collect all those charts. And once you have those charts, start to synthesize, like, okay, what makes this the best? Okay, like the sharper and bigger the move, the higher the volume upon the capitulation, the more legs we've gone down. And you start to find out what the best charts were. And you can even just purely reverse engineer it by saying, like, which ones bounce the most after? Why? Like, is there any logic that's kind of universal as you start to suss that out? And what you then want to do is figure out what system would allow me to best capture this. And you can test things. Like, I'm a big fan of just in something that's trending or counter trending using the prior bar lows. And so you can run a back test or just manually crunch some data or just use your eyeballs and say, what happens if I use prior bar lows as a stop? What happens if I use a 20 period moving average? What happens if I just hold for 1 hour, 30 minutes, 2 hours, 2 days, 1 day, 5 days? What happens over time? And you collect all these back studies, testing different entries, testing different exits, testing different price targets, different stops. And overall, you're then building a system by doing that work. And so I think that's the type of hard work where, like, yeah, you can spend years looking for a strategy or years reading books on trading strategies. How many people have really done a project like that and just gone really deep into the data? How many people have in their Evernote or their Notion 200 plus charts of big panics? But that's a lot of the work that people need and should be doing. And look, I guarantee you there's a zillion other speakers as part of this conference that have given incredible strategies and examples. And what you want to do is you want to find out, right? Like a productive task is go through this conference and write down every single case study, every single strategy that people present, and then make it a project. How can I find 20 more similar charts, and how can I backtest those? And that's how you go from consuming content that's inactionable to making it actionable and relatable to your trading.
Yeah, that's a really great answer. And I'm glad that you mentioned context, not just looking at the chart itself, but getting more of the context. I think AI and ChatGPT is really helpful for this. I love, you can, if you find a chart that had a capitulation day, say, hey, what was the news on May 8th, 2013 for this stock? And it makes it so much easier. You used to have to go to the investor news on the website and go find that day or whatever, but AI has helped that immensely. And one thing I did want to ask you there is, after you've done that study for quite some time, maybe you've done it for months, year plus, what are some signs that traders can use as, maybe milestones to help build their confidence to say, hey, all right, you're starting to have depth in the setup, you're starting to really get it. Maybe they've started taking trades and that's working for them, but what should some traders be looking for to say, hey, you're on the right track, if you get my meaning?
Yep. So I think what you inevitably need before you start trading and risking capital, and I think even experienced, advanced, elite traders end up putting capital at risk far more quickly than they should. And the holy grail is you find data tested upon a set of rules that has positive expected value. And when you look back through, even if you just have 5 charts, like there's going to be strategies where you don't have 200 charts of data. You might only have 3 or 4 examples. But the question is, if you follow that rule set, does that data point to you making money? If so, you can start to test it in a real world environment. And then what happens, because the reality is a lot of this stuff can happen in parallel, is you look for more examples going backwards at the same time that you're spotting and filtering and screening for these opportunities going forward, and you build this database up over time. So you might only have, like, one analogy I'll give is CPI in 2022, when all of a sudden inflation was a big deal. I always tell the story of CPI, to me, was one of the hottest trades of that year. And towards the end of the year, I had a lot of traders that I would mentor, and they would say, I'd say, hey, why aren't you getting involved in this? They would say, I don't have enough data points. And my response would be, well, yeah, like CPI hasn't moved the market for, at least a decade. No one has these data points. If you're going to wait for 50 data points, it's going to be too late, right? And what ends up happening is you might get a couple data points, and then you start to forward test, and you test it in real time. And if your hypothesis and your data starts to work, you gradually, prudently start to size up. But guess what? When a new strategy becomes in play, or when something new happens, there's not going to be necessarily content you can consume that's going to give you those answers. What was the playbook for trading, the tariffs in April? Well, guess what? You needed to study 2018 and the tariffs then. What was the playbook for trading oil on the recent war in the Middle East? Well, guess what? You can go back to October 2024, and you can go back to, I think it was 2019 when the Houthis hit Saudi Arabia's Abqaiq. And guess what? I've never heard of a single podcast or lecture or tweet giving me that information and that data. But that's the hard work to find the comparables and then also, build that framework going forward.
Excellent. And one other thing that's kind of similar to what you've been discussing that I've seen you do that I think is a great exercise is it seems like from what you've tweeted out, each month you go back and see what were the best opportunities of the month. And I don't know exactly your process for reviewing those, but I've kind of adopted that. I do it on a weekly basis and monthly basis a little bit as well. But yeah, maybe talk a little bit about that. What do you do to collect those opportunities to study later, see if you caught them, see if you missed them, and how do you analyze them further to in the future, take that study and improve your trading?
Yep. And so what you're referring to is pretty much, I don't know, towards the beginning of each month, I do a tweet, and it's been going on, I don't know, 2+ years now, where I tweet what I thought were the best opportunities based, and again, this is all based from my perspective. I know there's traders out here, and this is so important. Like, there will be traders out there that do not trade a single trade that I think is great, and I don't trade a single trade that they think is great, and that's fine, right? It's just my perspective. But I compile that list, and so what I do is over the course of the month, I'm taking this list proactively, which is useful. And then the benefit of a trading pod is I will then, at the end of the month, reach out to a couple of my trader friends that are kind of similar styles. Not exactly the same, because if I get exactly the same list, it doesn't help. But people that are like all within my wheelhouse. And I ask them, hey, what's your list for the top ops? And I review theirs. And there's some times where it's like, oh, wow, I didn't even see this opportunity, or I didn't even think about this that way. And I'm like, wow, you're dead right. I really need to be studying this. And it's such a low time commitment way to really hone in on, like, what are the 5 to 10 opportunities I need to really study and database and write up from this month. And another great best practice is if you have a trading pod where you do this work together, you should just do a review together, each going through your list and why, and present it. And what I would also say is when you get a couple of really strong traders, if there's ever strong agreement, wow, this opportunity was really good, that's big signal. Like, I think most 7 and 8 figure traders I know, they all thought Circle was the stock of the month last month. Right. Guess what? Like, okay, that's a sign that I need to really study Circle. I tell my followers, you need to really study Circle. So I think that list is a very high ROI way to direct your attention to the right spots. And it doesn't take much effort.
Yeah, let's actually use that as another example. Say you're going to study Circle more. What would be the process you would do? Would you go day by day on your time frame and see what were the opportunities for your system? Do you look at the outside news and context that came about with that IPO? What theme it was in? What would be your process for really doing a deep dive on that setup and opportunity?
Yep, and so this is such a great question, because even, like, we always have more to learn. And so I was doing my monthly review for some of the videos I make, and Circle was the big ticker. And so I did exactly what you said, where I'm like, okay, like Circle was the ticker of the month. Let me just purely look at this with no biases and figure out what were the really big opportunities. And as I started to go through day by day, and I mean, I'll look at a daily chart, then I'll zoom in on the days. And that raised a very important point where I was like, wait a second, Lance, like, no one's talking about one of the best trades. And Lance, you weren't even thinking about the best trade. The IPO priced $61. Or sorry, the IPO priced $31.
Right.
It opened at what, 80 something? Like, how many traders recognize, like, oh wow, like, first of all, the number one original opportunity was, can I get an allocation?
Right.
And guess what? For many traders, you actually could have. This was not that crazy hard to get an allocation to. There were some places you could have got that. And even if you can't, it's at least worth being mentally open and asking these questions. Okay, no, can't get an allocation, fine. At least I checked that box. Then, on IPO day, I study the IPO day. I've got a database. I've got a database of, I don't know, it's probably 100 plus IPOs at this point. Again, mostly the hot ones, not the shitty ones, because but I know that it's abnormally likely that IPOs make a strong opening drive. It's also abnormally likely that if they make that strong opening drive, a lot of them then have a really nice counter leg. That's play 1 and play 2 for me. Another common play in IPOs is some of them then end up range bound for most of the day. And I'm hands off for the most part. And that alone saves me a lot of money. Then a lot of those tend to break out at the end of the day into the close. And that play can be incredible and follow a ton of momentum into the overnight. And so then you play the breakout and then you play the overnight trade. And so just on that one day, and Circle ended up staying range bound. But when I do that study, I'm observing all this. I'm looking into my database. I'm adding one more chart to that catalog.
Right.
So that's part of it. And then even there was the day it ended up having options, which was a couple days later after going up massively a couple days. There was a play there I did selling options, which then kind of, it's a way to short the stock when many players otherwise can't. Many players who are locked up might be able to hedge their stock using options. And so we did have a move. That was another potential interesting play. We then had a technical daily swing where we don't pull back too much. We have a shallow pullback. We start to curl higher. Then boom, we gap above the breakout level. And we then start to consolidate. And there's a swing trade. I think the price was above 140 or so. Then 2 days later, we have the stablecoin legislation. Coinbase and Circle explode. So now we have a news catalyst that this is breaking higher on. And the funny part about all this is, well, with that news catalyst, we then have a swing trade where we hold prior bar lows for a bunch. And the best part of all this is I'm telling you all of this right now, and I don't have a single chart up. Why am I able to tell you this? I'm able to tell you all this because I put in the hard work. Nobody out there is doing that hard work for me. I've not been able to download a podcast or a tweet or this that walks through all the detail that I studied on my own, going through bar by bar and dissecting all these opportunities and knowing that stablecoin legislation, we then had day 3 into kind of a euphoric exhaustion-esque play. Then we had the next day the $245 buyer, and that was kind of the money shot on the short once that buyer broke, and that set up a swing short. And so all of that is all in my head from doing the really, really hard work and studying it and going day by day. And this is as someone that has been trading almost 15 years now, someone that is not really the active trader they were. And so then if you're in the trenches trying to make this a career, that's the hard work you got to be doing. And there's no substitute for that. You can't get that without going through these charts and having that mental database, because I have 100 plus IPO charts. I have 100 plus charts of all these patterns. And that's what leads me to have the success I'm able to have.
Yeah, excellent. And I think that process is extremely valuable. One question I did have for that is, how do you capture kind of the intangibles surrounding a case study, outside of the price action? What information do you like to capture related to the theme that the stock was in when it makes a move, or the newscast around it when it makes a move? Because again, sometimes you have to go hunting a little bit more for what made Circle so special in the first place. Why would you be looking to get an allocation early on because it fits a theme that's hot in the markets, all of that, if you get my meaning?
Yep. So I think to some degree some of this stuff will always be subjective and qualitative. What made the 2021 atmosphere so special? Like inevitably you can look at a chart and be like, holy crap, this made one hell of a move. But what you really also need is the experience of having been there and knowing like, wow, like everything was squeezing then. There was so much money coming into this, Wall Street bets, everything was momentum. So that context is important. And there's ways to even take qualitative data and make it quantitative and a little bit more objective. And you can say, wow, the market was like 8 out of 10 strong, 10 out of 10 strong. Back in 2021, it was 12 out of 10 euphoric or something. And guess what? If that Circle IPO happened in April during the market panic, again, we don't really know what would have happened, but I would like to think that was not going to explode like it did. We had CoreWeave that IPO'd, and kind of with the whole AI data center demand, when we saw the market bounce and NVIDIA and everything kind of reclaim and go higher, that IPO started to really, really take off. I don't think Circle would have done what it did if CoreWeave didn't do what it did. And in fact, on some of those days, we started to see the two trade with a decent correlation. Yeah. And so that stuff is going to be hard to codify, but you can still annotate that and describe the market you're in. And I think even as part of a good trade write-up, and I have a template for this somewhere online, those write-ups should include that context, because that context matters. It matters what's the market like, what's the psychology like, what has been in play at the time. If you recall, I think this was maybe 2023, there was a time period when small cap biotechs were just absolutely exploding and going nuts. Like, oh my God, you get one headline, these things were going up hundreds of %. If you're a small cap trader and you trade mean reversion small caps and you don't notice that pattern's happening, you're going to get just absolutely blown out and crushed. And so that context does matter. And it really helps to just be aware of, like, what are the themes in the market right now. There is a lot of momentum. There is a lot of froth. We are seeing small caps be very, very lively again. So that definitely should be a factor in a lot of this stuff.
How often before you're going to place a trade or as you spot a setup, do you remember a similar type situation precedent that you can use from, years before, having done the work and built that database up? How often does it happen where you're like, this looks exactly like, insert ticker here, and that helps build your confidence, and just it reminds you of the situation and increases your focus on that potential opportunity?
Yeah, I mean, I think there's some traders, especially when I was doing this, 60 plus hours a week, I was just like near photographic memory, just because you're spending so much time thinking and delving into these charts. Now much less so. And so there's some traders that are really good at those analogies, like Native Investors Live is really good at those analogies. But I would say what I've done over time is I've more so built a framework for understanding price action. So even if something has no direct comparable, I still have my way of viewing things, right? Like, okay, I want a capitulation to have accelerating bars. I want us to be stretched above a Bollinger Band. I ideally want us on day 3 or more. I want us to have multiple legs. I want us to have really crazy volume. I want us to have a buyer at $245 being the sole thing holding the stock up after a margin increase. And maybe someone was short a lot and now they just can't hold this anymore. I want to, yes, like examples are great, but I think the true meta is when you're able to go beyond a specific example and build yourself a framework for understanding why price and market structure acts kind of the way it does. And understanding, wow, this is what euphoria conceptually feels like and sees like. This is what the other side, panic and capitulation, right? Comparing April in the market versus, a couple weeks ago in Circle. Those are two opposite sides of the same coin.
Right. Excellent. No, Lance, this has been great. Do you have any last bits of advice or thoughts, either on building a model book, building a database of setups to study, or just larger from the framework of your presentation, learning to learn about what actually matters when it comes to trading?
Yep. I mean, I think if people just took away one thing, it is how effective, how much one person can accomplish if they simply take even just 1 hour of deep work more than what they're currently doing to work on the high leverage kind of constraint for their trading or anything they're doing. And it's not comfortable, but it's so important. And if you study the people that have had outlier success, I think you'll find that those are the people. Like, it's not crazy intelligence. It's not like, obviously you need all this stuff, but so much that differentiates output is the ability to really just spend a non-crazy amount of time on the most important thing, and taking alone just the time to figure out what that is for you.
Awesome. Lance, thank you so much for your time. Where else can people go if they'd like to learn more from you about your style? Where would you point them to?
Yep. Well, I am always dropping fire on my Twitter, and I'm doing a big YouTube push where just trying to pump a lot of good free content over time. So either of those channels at the One Lance Beat.
Excellent. Well, Lance, thanks again so much for your presentation. We will be inviting you back after all. Thank you so much. Yeah, thanks again for your time. To everybody watching, hope you really enjoyed. Check out the resources mentioned. Leave a like on the video if you did enjoy. Subscribe if you're new to the channel, and we'll be right back. Stay tuned.